Talk about one sector that's one of its biggest consumers, real estate. The Finance Ministry has stepped in to try and soothe frayed nerves, extending a lifeline of sorts for stressed housing finance companies. This, in turn, will give the housing finance companies the much-needed capital to resume lending to home buyers and, in turn, bail out developers who, of late, have turned to private equity players to bail them out. Joining us now to give us a more holistic picture of the entire sector and a source of funding is Anuj Puri, Chairman and Country Head at Anarock Property Consultants. Anuj, thanks very much for taking out the time. Weigh in on this aspect where, the government is trying its bit to make sure that there's enough and ample liquidity, to support the sector, not just from the end consumer standpoint, but also to make sure that there is this lifeline to the developers as well. What's your sense on what's the outcome of this, and do you see things changing materially?
So, very good morning, and thank you for having me on the show. Clearly, there are two troubles that are currently infested on the real estate. One is on the demand side, and the other one is on the liquidity side. And the government is clearly trying to address the liquidity concern. If you were to look at the liquidity, there is a part A and a part B. Part A is on the home loan disbursement. What we have seen is many of the NBFCs who are very aggressive in the last 2 or 3 years have gone very quiet in the last sort of 8 to 10 months on home loans. Also, the subvention scheme has been taken out, and clearly the NBFCs are going soft on that, and hence the home buyer is not getting access to the loan as quickly as they were getting earlier. And the part B, which is really where the bigger problem on the liquidity is, where the developers are not getting the funding from the NBFCs or the HFCs. Clearly, when you're speaking with the NBFCs and the HFCs, they're saying is because the money coming in from the banks and the mutual funds towards the real estate sector has slowed down, as a result of which the tank that they had of the money is not getting fulfilled. As a result of which the money that they used to disperse to the developers has gone down. Now that is starting to create a trouble on its own, because the developers had assumed that there would be money that will come in from the HFCs and NBFCs to complete the project. Now that money isn't coming in. On the other hand, the demand has slowed down. So clearly there is a problem that has erupted in being able to complete the projects. And this is where the government is stepping in and saying is that we want to address this issue by bringing in liquidity so that these developers do not get jammed, and we don't have situations across India as what we are seeing in Noida and Greater Noida, where half completed or 3/4 completed projects are struggling because there is not enough cash to complete those projects.
Do you feel that at this point in time for the real estate space, the challenge lies more with the developers or with the consumer and the consumption that we're seeing? Residential real estate, aside from affordable housing, which has been okay so far, has still been struggling. Commercial real estate, on the other hand, has probably been the saving grace.
Yeah, I think you summarized it so beautifully. You're absolutely right. Initially we thought that it was largely the liquidity issue that was on to the developers. Then, that culminated into HFCs slowing down on the home loan side. And clearly on the demand side, in the last 6 or 7 months, we've seen as, there is a larger impact that is being felt on the overall economy. We're starting to see the demand slow down, other than the affordable housing. That I must give it to our Honorable Prime Minister, that he had looked into this affordable housing. That scheme, if a developer is launching a good developer, good location, right ticket price, sells like hot potatoes. There are a couple of schemes that we launched near Dussehra and Diwali, and 500-600 apartments have been sold in 8 or 9 days. That's the take up on the affordable housing of a right developer, right location, right ticket price. But other than that, in the premium luxury sector, that is where the larger pain is, and that is where we're seeing the demand continuing to remain very lackluster. On the other hand, as you rightly pointed out, commercial is doing exceptionally well. I mean, 2018 calendar year was one of the best years. I think 2019 will surpass 2018 in terms of the demand. The rentals continue to grow between 1 to 3% every quarter. We've seen the Embassy REIT do exceptionally well. You know, we're hoping in the next 2 or 3 months there will be other REITs that will get listed. They'll perhaps be oversubscribed again, just like what had happened in the Embassy REIT, and trade at a premium. So commercial doing exceptionally well, residential affordable doing exceptionally well. It is really at the premium luxury where it has got jammed, and that's largely in cities like NCR and Mumbai.
So obviously, while that's the takeaway, and as I'm looking at some numbers as of quarter 3 of calendar year 19, inventories, unsold housing units across 7 cities are about 6,56,000 units, and out of that, 68% of the unsold inventory still lies in the affordable to the mid housing projects. It is somewhat of a divergence to what we've just been talking about.
Yeah, it is a very interesting point. There is a large unsold inventory under construction on affordable housing, and that's because the design of that inventory is completely wrong. I think what the developers got it wrong is that, it is just the ticket price, and as long as I can deliver it in, say, 40-50 lakh rupees, other than Bombay, and in Bombay less than a 1.5 crore rupee, it will be fully acceptable. It is not working like that. The buyer is saying is, whilst I'm willing to pay the price and it is affordable, but I want the full facilities, I want a livable, habitable apartment. I think where you're seeing the unsold inventory is, you stretch your arms on the 2 sides and you're touching the walls of the room. I mean, the beds can't really properly fit in, the wardrobes can't fit in, there is no space to move in those rooms. And that's where the developers got it wrong, that they only went for the ticket price, not appreciating that even the person who's coming in for affordable housing has an aspiration and wants to buy a product that he or she is going to be able to live in there. Now, as these schemes are coming in with wrong design and the buyer is going and visiting those schemes, they are saying, well, we're not going to be able to live in it. It may be acceptable to us as far as the budget is concerned, but ultimately we have to live in this. You're trying to make like a railway compartment, apartments on both sides, no natural ventilation in the toilets, bathrooms, no natural lighting in the kitchen. We're not going to be able to buy those things. So it is a huge evolution that has happened from starting in 2014 to say is it's a ticket price to now saying is that whilst ticket price is important, yet what is more important is the design and the livability index of those places.
Okay, got that. Let's also, shift this conversation back towards, the funding aspect. And from Jan to September, the last 9 months, PE funding for commercial real estate has been up 43%. PE funding for residential segment has been up 40%. Retail segment has gone down a bit. But do you see this as becoming, go-to segment to fill the gap that is there in terms of funding?
Clearly, because there is a huge amount of debt pressure coming in from the NBFCs to the developers to say is pay back our debt. How they're going to be able to pay back is only by selling those commercial assets. And that's what we are seeing. The new tone over the last 6 months is many of the developers who have these crown jewels with them wanting to sell these crown jewels to the private equity, get in the cash so that they can pay back or pare down their debt of the NBFCs so that the NBFCs can retire the money that they owed to the mutual funds or the banks. So that is how the unwinding of the cycle is happening, where the developers are selling their completed office assets, income yielding, to private equity who has a ton of money, and is giving the money to the developer, who's giving it back to the NBFC, who's giving it back to the mutual fund, and unwinding that cycle. I think this trend over the next 18 months you will continue to see, and in this process you will see is that the private equity, they will continue to consolidate more and more position, and amongst the top 5 office developers, I dare say 3 or 4 will be foreign private equity funds, and there'll be probably 1 or 2 Indian developers left in the top 5 for India.
Then what happens to the market share displacement with regards to the larger developers versus the smaller ones that are slowly running out of business because for variable reasons, not getting enough funding, sitting on a huge stock of unsold inventory, which is not sold, and they have no money to pay back debt. So what happens in that scenario?
So Divina, we used to use this word larger and smaller. I think over the last couple of quarters, I have actually changed that terminology because I've seen a lot of the larger ones fall as well. And many of the smaller ones who were less leveraged, very disciplined, had the corporate governance, took care of their customers, doing exceptionally well. So I'm saying is, those who were ill-governed, had too much of debt, are the ones who are actually at this moment in time, perishing and will ultimately get consolidated. A smaller guy, a niche guy who was disciplined and made sure that, they were not taking out the money or they were, delivering the projects with focus on the customer are the ones who are going to really consolidate. Now, the larger or the smaller developer who's been indisciplined, if they have income generating assets, they are still getting bailed out because those assets, they're selling it to the private equity who's giving them the money and they're being able to pay back their lenders. Those who do not have income generating assets are the ones really in grief at this moment in time and will be taken to NCLT or NPAs, and that's how we're going to see the unwinding of this situation over the next few quarters.
Okay, got that. Anuj, it was great chatting with you and getting your thoughts on the show. Appreciate you taking out the time.
Thank you very much.